Good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is Market Insider TV. This is our opening commentary, Wednesday, September the 10th. Good morning. Hope you had a great evening. We're going to look at some market activity, some market information here this morning, and our plate is pretty full, as we will be talking about a lot of different markets, a lot of different information, and a lot of things happening this week. I will be talking the grain, livestock markets, as well as other markets on RFD TV this morning, Thursday and Friday morning, taking a look at our trading day ahead and kind of setting the table for the day. This is an early look at some of the things we're going to be talking about this morning. Let's look at first dollar index, slightly weaker here this morning. Nat gas is down near the bottom end of its trading channel. Crude oil a little bit firmer here again, and the stock market is stronger, 32 points higher. We had PPI data this morning. Tomorrow is CPI. PPI says inflation falls to 2.6%. That is below expectations of 3.3. Core PPI fell to 2.8%. That's also below expectations of 3.5. Both of these numbers are friendly for the market, and that's a month-over-month PPI inflation being negative for just the second time since March of 2024. We do expect cuts are on the way, and that will help these numbers even further, help the stock market even further, and that's why we're reaching out to going to new highs this morning in the S&Ps. Gold stronger while silver is down. Corn down a quarter, beans off 1 3/4, hovering around that 1030 area. That's been some decent support. And in the wheat, we're fractionally higher to start our morning off. So let's talk more detail about these markets and what we can expect in today's trade. First of all, this week's forecast, warmer temperatures, that's going to aid in field dry down. It's going to get producers out in the fields a little quicker, and we're hearing a lot of harvest activity across the Midwest. So a lot of producers out there in their fields. Supply and demand report comes out on Friday at 11 o'clock Central Time from the USDA. They will update yield forecasts. It's also last trading day for September grain futures. So if you have any of those, you only have a couple more days to liquidate those positions. Analysts expect corn yields to decline from 188.8 down to 186.2, about 2.5 bushel reduction ahead of Friday's report. Forecasts do range for a low of 182.7 all the way up to new highs at 189. We think the yields in the month of August decline because of dry conditions. That will be reflected in this report from the government, and continue to think we've seen the highest corn yields on print from the government. Looking at soybeans, we're not expecting big changes there. For soybeans, trade yield is 53.3, down slightly, about 0.3 of a bushel from August. Ending stocks should come in just slightly lower for soybeans. I don't have it on there for corn, but corn ending stocks could be down about 100 million from a month ago. We should be pricing in pretty much all the old crop stocks usage here now, and really focus on that new crop category after this report. The Stats Canada report came out yesterday. It was a little friendly for wheat, as all wheat stocks were below expectations and well below last year's levels. Last year we were over 5 million tons, and right now wheat stocks on hand is closer to 4.1. So a decent number of stocks reduction there, and should help support this wheat market. Light cash cattle trade did occur in the north yesterday, 378 dress. That'd be $5 lower than the previous week. We've been mentioning that if the cutouts have topped, which we believe they have, the cash is going to start to fall, and we'll see the futures under some heavy selling pressure. We did see this cash trade down. We see cutouts were mixed yesterday, and Oklahoma City was down $4 to $10 in their Fed cash cattle trade yesterday. So that sets us up for lower prices. And boy, did we drop sharply lower yesterday. We ended limit down in feeder cattle, and we will have expanded limits today because of that. So live cattle limits expand to 1075. Feeder limits go to 1375 today. November feeders closed at 348.87. Right now, it's a steady to slightly lower bid ask. Hopefully that doesn't change very much for the cattle. And live cattle, similar type of bid ask, very much a steady to slightly lower opening here but you would suspect we'll have some follow through buying synthetically. We were down a couple more dollars. Coming up a week from this Friday is another cattle on feed report, and those numbers look to be bullish. So I know things are looking terrible here after yesterday's limit down action. We haven't changed the technical trend. The fundamentals haven't changed overall, but the softer cash trade will pull us off of these highs that we have been trading at in live cattle and feeders. Have a good day, everyone. Good luck. And as always, reach out to us. We'd be glad to talk markets with you. This has been Brian Hoops, Midwest Market Solutions.